Hey everyone, it's Investment Tuesday, and it is being recorded on a Monday, so Investment Tuesday. But so if it is slightly lagged in terms of information, in terms of prices, well, what to do? It takes a little bit of time to make the video, edit the video, publish the video. So 1 day lag, it's fine. But all of you know what is going on with the markets. There is a lot of turmoil. There is a lot of instability. And there are new directions that the vast majority of investors simply are not prepared for, are not looking at, and as a result are likely to miss. And some of it is sort of like so surprising, but yet so obvious that I know what people are going to think and do after watching this video. They're like, no, this is too boring. This is too obvious. It can't be. This can't be. But all of the evidence and facts and research are pointing in this direction, which is that the best AI bet is actually not in any AI company. Uh, yeah, it's become like increasingly clear. The first time I came across these companies, I was like, oh, really? I mean, wow, this would be an extraordinary transformation because the best bet in AI, yeah, no one is thinking this. No one is thinking this, but the evidence is very, 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 very clear. And I'm going to go into this in a little bit of detail. Now, we've just gotten into these stocks, so I can't give these stocks away yet. And that's not intended to be a tease. I will give some stocks away, but subscribers of ATG Digital have to have some benefit. Like I can't just, put the things out there on YouTube because that would just would not be fair. But I'll come to it in like a month or so. We'll start to put out some of the stocks that we are adding to ATG Digital portfolios for this AI-driven market, right? But if you're watching this, it won't be hard to figure out, what to buy, etc. Because these are like historically some of the most boring, dull, reliable companies in the world. And here they are. Here they are in the middle of the greatest, biggest technology shift, and it goes right through them. And it is, like I said, so obvious, so clear that pretty much everyone is going to miss it. So let's get into it. But before I do that, let me do the legal disclaimers and disclosures, which is that this video and the content from ATG Digital is not investment or financial advice. It is presented to you as opinion. Use it as information, engagement, or entertainment. Next, all ATG Digital content may contain errors, oversights, and mistakes. Understand that investment operations sounds complicated, but essentially means buying or selling a stock, buying or selling options or crypto. They have significant risks and can lead to the loss of your principal. What is the loss of your principal? Losing money. All right. I mean, we don't have to talk about making money because everyone's happy. There's no problem with that. Next, the owners, employees, contractors of ATG Digital own, trade, transact in the securities I mentioned in this video, and all content from ATG Digital. I think that's pretty self-explanatory. We do not take money from companies or crypto promoters, pumpers to recommend their stocks or crypto tokens. This is widely done now by people who have channels on YouTube or have large followings on social media. We do not do this for better and for worse, for gain and for loss. What you get from us is our independent, unique point of view. Any day the market is open, we have a Substack that goes out. I and my colleagues, Dean and Dan, you'll know them from the channel. They have their own X podcast. We write I have a podcast on Spotify called Bald Man Speculating. That puts out an episode every 3 weeks or so. And then, of course, I'm on YouTube pretty much every week. Social media, I'm very active on X, and then there's Instagram and Facebook where we are reasonably active. If you are looking for subscriptions, and what does a subscription give you? I mean, we have updates. We get trades, in other words, picks. We have 3 stock picking and crypto picking buy and hold tiers. And then we have a trading tier. And then we have also a tier which provides sort of like, bigger reports and like much more detail on sort of like especially big, broad themes, especially now with what's going on with tariffs, trade war, even AI. Yeah. There are these big themes that are emerging. And we have a tier, the purple tier, which is a mix of like a loyalty tier and also providing you extra detail that's there. So you can check all of these offerings out at atgdigital.media. Okay, enough about all that. So this is a headline from a website called oilprice.com. And April 17th, so very, very current. And it has some stunning, shocking details about AI. While everyone's focused on semiconductors, chips, open AI, all these AI, LLM models, etc., in my opinion, the best bet, the bet that has the highest likelihood or probability of paying off, and for big money too, because no one is really anticipating it in this sector, is going to be best AI bet is going to be through electricity, right? And this article gets to the heart of it, which is that it says right there, U.S. electricity demand is soaring due to rapid growth in AI data centers. And then, of course, there's other sort of like thematic things that also sort of like help it, which is, and the planned reshoring of manufacturing. And I would throw in there the coming use of blockchain, which, is an additional usage of electricity. But some of the details here are genuinely quite stunning. Especially this one. This one definitely took me by surprise. I just want to make sure you guys can see this properly. Okay, you can. You see that it says AI data centers are set to account for almost half of US power demand growth. Now, not half of US power demand, but the demand growth by the end of the decade. In other words, when we're putting up new power capacity, half of that is going for AI. And then you'll see underneath here, it said, driven by AI, America will consume more electricity for data centers than for the production of aluminum, steel, cement, chemicals, and all other energy intensive goods combined. Wow. That is incredible. In other words, we are going to need an extraordinary amount of energy, electricity. Right? I mean, and you can see this here. By 2035, data centers are set to account for 8.6% of all US electricity demand, more than double their share today. Many of you may think, well, Paul, what's 8.6%? Sounds like a pretty small number, and 2035 is so far away. Listen, folks, it costs hundreds of millions of dollars to put up an electric plant. In addition to that, it takes at minimum 3 to 5 years. I mean, if it's a large plant, it will take 5 to 7 years, right? So all of this is a big deal. It's a big deal, and it is going to run electricity prices higher. It's going to run spending on electricity infrastructure higher. And that is driving what is becoming very clear to me, a huge, massive, incredible bull market in electricity and electricity related stocks and investments. And at ATG Digital, we have been adding stocks exposed to electricity for, I'll say, about like what, maybe a month and a half, etc. Um, and given the size of this, we're going to add more. Now, the vast majority of people are going to be like, Paul, this is a mad idea. There's got to be something that is more exciting, more interesting, more sexy than, you know, electricity, the way to play AI. But listen, folks, look at this. I mean, AI data centers are set to account for almost half of US power demand growth by the end of the decade. That is an incredible statement. I mean, it may not impress you, but just take my word for it that that is an absolutely astonishing, incredible statement. And being that we're not all conversant in, what gigawatts means, I mean, or, that doesn't mean anything to us, right? But it says US data center power demand will more than double over the next decade from 78 gigawatts in 2035 from nearly 35. Yeah, I mean, double, like, it's 10 years. How hard can it be? It's going to be hard. It is going to be very difficult to put up that much electric capacity. And the biggest issue is like, well, what are we going to power this with? It's not like you can rub, a couple of sticks and get energy to produce that kind of power. And like I said, like 10 years seems like a lot, but 10 years is not a lot because it takes a very long time to site a new power plant. It takes quite a bit of time to actually get it running so that it actually is producing power on a regular basis. Then there's, just the issue that everybody wants the power, but nobody wants the power plant, right? So these things are very regulated, very difficult to site, is going to be a struggle. That means as the demand comes in, there's not going to be the supply. And when there is too much demand and insufficient supply, markets, the way it works, demand outstrips supply, prices go up. So, and there's no way to immediately respond to this surge in demand. You cannot just put up a plant in a day, in a week, in a month, in a year. It takes multiple years. So there is this lag that is going to be there, I'm going to say, for the foreseeable future. This is going to last 10, 15, 20 years. In other words, electricity prices will continually keep moving up because that is the signal to investors, to companies that like, hey, we need more supply. We need more supply. Price is always the trigger that tells you like, hey, this market is short of supply, build more, produce more. The problem is, of course, it takes too long. I mean, it takes 3 to 5 years. We've got environmental regulations. We've got legal regulations. It's a very high capital industry. In other words, people have to put up that money, right? Hundreds of millions of dollars. So it all points to a very, very large, big bull market that the vast majority of investors who are very focused on Mag 7 and all, NVIDIA, others are like, that's too boring. That's too, it's not interesting enough for me. But the truth is that, these stocks are cheap. These stocks do not incorporate high growth into the future. I will say nearly nobody. I'm sure there's somebody out there that is talking about electricity demand and connecting it to AI. But I'm going to say those folks are few and far between. I think if you go on YouTube, you go on social media, you count the references for NVIDIA and AI, I think you'll get, 1 million. And you count the references for AI and electricity, you'll get 100. So the reason to bring that up is that no one's focused on this, but that's good because the prices are low. These stocks are not seen as growth stocks. These stocks are not seen as anything to do with AI or technology, and people will fight it. They'll fight it. Nonetheless, the growth numbers are huge. So I think I'm belaboring the point here. Let's get to this second part of this article, which is important, which is that where will we get the energy to power all this new electricity capacity, right? I mean, the idea would be that, it must be like a complete boom for renewables, like solar power. Yeah, it won't work that way, because oftentimes the best place to site a server farm is not necessarily the best place to have solar power, right? Solar farms, they need kind of like cold weather, right? Because those server farms generate a lot of heat. So you can't necessarily put them necessarily in the same place where you might get a lot of renewable energy. Renewable energy just generally has the problem, which is that it tends to be situated away from the rest of the infrastructure. So maybe you can produce a lot of solar energy someplace, but it's very difficult to connect it to the existing infrastructure. Same is true for wind. Now you'll say, well, batteries, Paul, that must mean there'll be a boom for batteries. Yeah, well, the thing is that batteries are an extra expenditure, right? I mean, it's extra money. Somebody's got to put that capital up. Long story short, which is that given that the demand is already here, the supply is already years behind, we need this to move sooner. And sooner means, 3, 5, 7 years. So natural gas, which is, what you use for cooking, etc., that's what's going to be the energy source to provide 60%. You can see this here. I know who will power the AI boom? Natural gas, set to provide 60% the incremental generation capacity related to data center demand. And then renewables, will definitely play some role, but the immediate growth is going to be for natural gas, which is why we have been adding stocks that have, significant reserves of natural gas, that have infrastructure, pipelines, storage, distribution capabilities. All of them, are going to have to build out more and more capacity, right? Which, of course, means that they're going to have rising prices, which means that they will see higher revenue growth. They will see higher sales growth. They will see higher profitability. And the market's not ready or prepared or thinking through this. So their multiples. What is this multiple thing? Well, I mean, most people focus on a business, but a lot of the stock price's return comes from what people are willing to pay. I mean, how many times sales, is 3 times sales, 5 times sales, 7 times sales, 10 times sales, or earnings, 5 times earnings, 10 times earnings. The multiples are very low, and they do not currently anticipate or discount all of this coming growth. And that is a formula for huge gains, because you got 2 elevators working for you, right? The first elevator is sales and or profits. And then the second is this multiple growth, right? Whether it be driven by sales or earnings, people are willing to pay more for every dollar of sales, more for every dollar of earnings as this growth continues, say from 1 year to 3 years, 3 years to 5 years, 5 years to 7 years. And then probably like in 5 years, people are like, hey, guess what? These old sleepy companies that used to be called utilities, they're growth companies. And that's where the AI growth is. By then, my guess is, half the return will be there. So now's the time. It's early. But it's not so early that, the stocks are not being bid up. There's clearly investors that get what I am laying out for you, because some of these stocks are hitting 52-week highs. right? In this market, in other words, in a market where, yeah, today what stocks are down 2.5. I mean, like whatever, S&P's down 2%, etc. Yeah, you can see active buying for these stocks. In other words, there's enough people that understand this that they're beginning to buy. All right, let's just move to another headline that I found. This came out on April 14th. And this shows you that people don't really, yeah, investors are not very focused on this connection between AI and electricity energy, right? So Dominion Energy is the dominant, yeah, I mean, electricity company in Virginia, and they're asking for a 14% rate hike. Many of you think, 14%, Paul, what's the big deal? I mean, that's the big deal, right? I mean, electricity prices are jumping by 14%, not a small thing. And the price hike is being driven by exactly what I'm saying, which is that they got to upgrade all of their infrastructure to meet this growing demand from data centers, AI. So this article talks about how, this rate hike made international news because it was so big. And it explains this, which is that the rate hikes are, in this paragraph here, it says the rate hikes are inevitable because U.S. utilities earn a return based on the original cost of assets less depreciation. Okay, this sounds very all technical, and we'll just skip through that. Bottom line, demand is exceeding supply. And whether it be this company, which is Dominion Resources, or others, they're like, hey, we gotta spend money on making our infrastructure better, newer, more efficient. They might have put up a new plant. They may need new wires or replace wires. In other words, they've got to spend. And given the nature of how these companies are regulated, yeah, I mean, they will go to their regulator and be like, listen, you got to increase prices by 13 or 14, in this case, 14%, which is a big number. It's a big number. So I bring up the second article to be like, hey, this is happening now. And it's going to continue because of this lagging effect that, whatever infrastructure they're putting in is going to take a year, 2, 3, 4 years to put it in, right? So the last article I want to share, which makes this entire AI, electricity, and also natural gas bull market, which are sort of like all and energy infrastructure, but particularly electricity energy and natural gas energy infrastructure, puts it all together, is this then connection to tariffs and the trade war, which is that the US wants other countries to buy more from us. One of the easiest ways to do that is to buy plentiful American gas that we now put into ships using, it's called liquid natural gas. And I saw this headline this morning. We've got Europe and most likely Japan will sign on to do the same things. In other words, this bull market has like lots of different parts. It's huge. It's big. Most people are just not focused on this market, which means the stocks are cheap, the investments are cheap, and which means there's a lot of upside and big upside. And given that the investors are like all invested in the old bull market, which is the Mag 7 and Nvidia and others, as they come to invest, they will come and bid these stocks higher from very, very low prices. So this is what this week's Investment Tuesday is about, which is that the best AI play is not an actual AI stock. It's actually electricity and various markets associated with that. It's electric utilities, it's infrastructure from electric infrastructure companies, it's natural gas companies, including transportation, and that infrastructure. This is where you actually want to be invested to benefit from AI. All right. That is the Investment Tuesday video for this week. I hope you found it useful. Subscribe to the channel and give us a thumbs up. And of course, subscribe to atgdigital.media if you want to see where and how we are investing in this AI secret bull market. All right. It's Paul saying thank you and goodbye.